Hello everyone, welcome to this video. This is actually my first ever YouTube video. So welcome, and the point of this video is about dividend growth investing. I've been working on this for the last 6 months or so, and I thought it might be helpful if I shared some of the things that I've learned and some of the trials and tribulations that I've gone through. Just to give you a little bit of an introduction and a little bit of background on me, I've recently retired about 6 months ago, retired early at the age of 55, and I'm excited about that. So as I began to retire and look to the future, I began to ask myself, what am I going to do with the rest of my life? And so one of the things that I'm focused on is dividend growth investing. Um, so while I am drawing a pension and I plan to invest to supplement this pension, because I want to keep pace with inflation, because as we all know, and as we're experiencing during this pandemic, things are getting more expensive. And so therefore, we need to keep pace with inflation, especially those of us who are retired now and looking to cover those kinds of things. But also, it's not just about inflation. It's about also the joy of giving. And one of the things that my wife and I love to do is to give to worthy causes. So what I look for in dividend growth investing is not only to help me keep pace with inflation for living, but to also provide funds for giving. And so that's something that that I'm really excited about. While I have watched a ton of YouTube videos, I have never actually created one. So one of a boss I used to have would say, anything worth doing well is worth doing poorly the first time. So hopefully this won't be too badly done, but it is my first one. I'll be looking for feedback from you on whether the content was worthwhile or suggestions on the ways that I can make this better. Looking forward to hearing your thoughts and comments on that. And if you do find this video worthwhile, if you would, it would mean the world to me if you would click the like button, the thumbs up button, and also click on the subscribe button so that you'll get notified of future videos that I make as we move forward. So disclaimer, I'm not a professional investment advisor. I can only share with you the things that I've learned, and I thought it might be helpful to share those with a group of people who are going through similar things that I'm going through. So hopefully it's helpful. Looking forward to getting on with the content. So grab your coffee and let's get to it. So I thought it would be helpful if I went through just a 50,000 foot level about the way I have my investments configured, and I break them down into 4 categories. I have real estate investments. I have higher yielding dividend stocks. These are dividend stocks that pay a dividend that is a high yield compared to what you would normally get in the market. I also have a portfolio, and it's a separate portfolio of stocks that pay dividends that the dividends themselves are growing quickly. They don't necessarily fit in the category of a high yielding dividend, but they're growing at a trajectory that's pretty high. And then lastly, growth stocks. And I don't study growth stocks. I'm not fast enough. That is a really quick area of the stock market. The hot growth stock today could be totally different than the hot growth stock tomorrow. And to be honest, that just doesn't excite me a lot. I do believe in having part of my portfolio there. So I actually invest in mutual funds for that part of my portfolio. So what I will be focusing on in these videos are the high yielding dividend stocks as well as the higher growth dividend stocks. So I thought that might be helpful to go through. Okay, I thought it'd be a good time to get started on my portfolio. As you can see here, I use simplysafedividends.com. as a tool. I have my portfolio loaded in here. Gives me some really good thumbnail information. It shows me the balance of my portfolio, which right now is $114,887. Shows me my annual income expectations from the dividends off of those investments, which is $5,945 on an annual basis. Gives me my yield, which is 5.15%, which is actually, I'm very proud because my target is only 4%. So I'm hitting a 5.15% target there. Dividend safety, it tells me which of my stocks are likely safe in terms of dividends, which are unrated and which are borderline. There's also categories of unsafe, which I don't plan to invest in those because this is about dividend investing. And so if the dividend is unsafe, I'm not really that interested in it. It shows me the CAGR, or the compound annual growth rate, for the last 5 years on my portfolio overall in general, which is a 5.5% per year CAGR. So I'm pretty excited about that. So I've got a 5% yield with a 5% CAGR. I think that's a pretty nice place to be. Shows me the diversification that I have. I'm heavily weighted in energy in this particular portfolio, 25%. It's probably a little bit high, but as I add more funds to this, I will bring some of these others up. Financials is the next highest at 15%. So the next thing is the income calendar. And we'll talk about this maybe in one of the videos when we talk about the funds that I've received. And it also gives you a forecast of, as long built on, the amount of the investment, the yield, as well as the CAGR. And it tells you what you can expect over the next 20 years in terms of income if you don't put any more money in. And there's also some interesting things around timeliness of investment. That may be one thing that we talk about is, how do you know? There's one thing, one question is, how do you know what stock to buy? And then the other question is, how do you know when to buy it? And that might be one of the topics for our key learnings section. So as you can tell, my portfolio has 20 holdings in it. And I don't necessarily want to go through all of these, but I would like to go through a couple of them. One of them is probably one of my higher dividend payers. Actually, I think it is my highest dividend payer. It's called Hess Midstream Limited Partnership. It is one that is not rated by Simply Safe Dividends. And this is, something that I would typically not do, but I do like this company. I like what it's got going on. I like its structure. And I'll talk about it more in one of the weeks when we talk about the actual stocks. So let's sort this in the order of holdings. And you'll notice here that my highest holding is Pinnacle West Capital. This stock is way down for me. It's about a 12% loss to this point. I'll talk about that, I think, in one of my future videos. Verizon is next in terms of weighting in my portfolio. I like Verizon a lot. I like the dividend yield, and I think it's it's got a promising future moving forward. So and then Hess is actually my third highest. Then IBM, Chevron, Maine, which is a capital loan financial stock that I find to be very attractive in terms of both its yield, which when I bought the shares that I bought were at almost 6.2% yield. Now it's down around 5.6. So the stock has gone up. You can see I've made about 10% on that. I've got AbbVie, Philip Morris, and Prudential, Kinder Morgan, Lockheed Martin, which we will definitely be talking about in a future video, Campbell's, General Mills, J.M. Smucker, Consolidated Edison, Community Trust Bank, Kimberly-Clark, Exxon, Kellogg's, and then this Kyndryl Holdings, which is only in here because they just recently spun off from IBM. I do plan to sell them soon because every day this value just keeps going down. So they really haven't given any information on the stock, how much their dividend's going to be, or anything like that. So doesn't seem to fit my strategy, and that's what I talked about earlier, is actually having a strategy, a written strategy, so that you know what you're trying to get accomplished. So basically that's my portfolio. Overall, I am down on this portfolio 0.8%. The big drags here, and you can see why I like this particular app. The big drags here are Pinnacle West and IBM. We do have some small drags with Verizon, Philip Morris, Kellogg's, Campbell Soup. We've got a few small things. I've got some pretty big gainers with Chevron and Community Trust Bancorp, as well as Main Street Capital, and then AbbVie. So, you know, that's the idea of having a diversified portfolio, is that while some things are down, some things are up. And at the end of the day, for me, I'm looking mainly out of this portfolio to have this annual income. As you can tell, that's $5,945. So it's almost $6,000. So it's almost $500 a month, which is a neat way to look at that. Then, you know, so I'm mainly after this yield and the annual income. I don't want to lose my capital, but this portfolio is not about growing this number as much as it is about getting the current income off of it. So my goal moving forward is not to make these videos terribly long, but I would like to share with you some content and some things that I've learned as I've moved throughout my investing career here. I'm thinking that there's going to be 4 different topics that I will do, maybe 1 video per week. That might be aggressive. I might not make that, but I'm going to try to do 1 video per week. The video for week 1 is going to be a bit of a portfolio update, and I'm going to show you guys what I'm investing in, what the stocks are, and talk about what the performance has been. Secondly, maybe you know, another one on dividend income that I've received for the month, maybe the prior month, to talk about how that comes in and even how dividends work. There's some confusion, especially to new investors or investors who aren't familiar with stocks with dividends, about how they work. So I think that might be helpful. The third thing, or the third week, I would plan to go over some specific stocks that I'm looking at, and some of the ones maybe either on my watch list or ones that I have recently purchased or ones that I'm planning to purchase that might be helpful, and then why I'm looking at them, what's attractive about them to me. And then lastly, I thought we would have a week of just something that's a key learning. And so for example, one of those key learnings would be I developed and needed to develop a written investment strategy. And I would suggest highly that you do that as well. As you think about, you know, what is it you're trying to accomplish with your investments, so that you don't get off the road, you don't fall into the ditch chasing something that sounds like a good idea at the time, but in reality doesn't fit your strategy. So I would highly recommend a written strategy. 1 week we can talk about that, and I can even share with you some of what I've written in mine. Also, things like, you know, what tools I use. For instance, there's apps that I use, like Yahoo Finance, which is a free program. There's also Seeking Alpha, which has some free content, but also some paid content. There's Simply Safe Dividends. There's Fast Graphs. There's and the like. And so there's several tools, and I thought maybe you know, I would take a video a month for at least 4, 5, 6 months and talk about those particular tools. So hopefully that's been somewhat helpful for you. It gives you an introduction of who I am, where I'm headed, and what these videos might be like moving forward. I do hope you find some value in this. That's the only reason I'm doing it. I could continue to work this portfolio myself, but I really look forward to engaging with people. If you've got questions about anything that you saw, wondered why I'm investing in something, give me a comment down below and I'll be happy to share some thoughts on that. I enjoy teaching. I enjoy just the process of engaging and interacting with people. So look forward to that for you. I think my next video is likely going to be on some specific stocks, because as I went through this process today filming this video, I found that I kept wanting to talk about the stocks themselves. And that's going to be helpful, I think, for both of us as we walk through that. With that, I'm going to sign off now. But again, any advice that I've given is strictly my own personal opinion. It has, I'm not a personal investment advisor. And I wish you luck, and I look forward to seeing you in my next video. So take care.